You are watching Morning Musings with Reinhard von Hennings, chairman and founder of Bridge House Law in Charlotte, North Carolina.
What are CBDCs? Hello, this is Reinhard von Hennings. Central Bank Digital Currencies, also known as CBDCs, are a digital form of fiat money that is backed by the government and issued by a central bank. CBDC is designed to operate as legal tender, and it's intended to be used as an alternative to physical cash. So far, everything okay? Well, some argue that CBDCs could revolutionize the financial industry, while others have concerns about legal, economic impact, concerns about privacy. Last year, I shared the main idea of CBDCs in a morning musing. President Biden signed an executive order the other day tasking various governmental agencies with developing frameworks and policies and proposals for enhancing the regulation and to develop a responsible development of digital currencies. Today, a year later, let's take a deeper dive, especially after some US states are now creating legislation to outlaw CBDCs in their states. First, let's talk about the pros of CBDCs. One of the main advantages of CBDCs is that they offer a more secure and efficient way of payment. Digital currencies have the potential to be faster, cheaper, and more secure than traditional payment methods. CBDCs also have the potential to improve the financial inclusion by providing access to banking services to those who are currently unbanked. Another benefit of CBDC is that it could help to reduce the financial transaction costs. Traditional payment systems, even though they are billed by cents or by small percentages, are often expensive, and with CBDCs, the transaction fees could be lowered. It would be a more cost-effective way for both consumers and businesses to save money on transaction fees. So let's talk about the cons. What are the cons? One of the main concerns is that it would threaten the existing system. Seems to be the ongoing question. There's change coming. Hey, that's scary. It will change the system. Some experts, however, worry that CBDCs, if they were to become widely adopted, it would be undeterminable what role does a bank have? What is the role of financial intermediaries? Who is doing what? This could result in a less stable financial system, and could it be more complicated for central banks to control the monetary supply. Another potential drawback of CBDCs is that it could be used to facilitate illegal activities. Because although CBDC transactions are anonymous, it would be more difficult to track and to monitor money laundering and other transactions where criminals are engaged in potential terrorist activities. Let's talk about some legal concerns at large. Digital currencies are often associated with anonymity. And again, this could be a double-edged sword. While anonymity can help us to protect our users' privacy, it would also make it easier for criminals to engage in activities where privacy is being broken. Governments and central banks must balance the need for privacy on the one hand, but on the other hand, governments and especially law enforcement agencies need to know who is doing what in order to fight crime. So security and oversight is a topic. Another concern, of course, is jurisdiction. Where is this CBDC done? What jurisdiction is applicable if CBDC crosses borders? Which jurisdiction would have the authority to regulate, to control, to get data, maybe even to prosecute abuse? This could lead to conflicts between countries and made it more difficult for governments to do international money control. Let's talk about the economic impact. CBDCs have the potential to grow significantly. On the one hand, CBDC could increase financial inclusion and provide banking services. On the other hand, it may have negative economic impact. If they became widely adopted, what would the banks do? What would the financial intermediaries do? Would they all go out of business? What does this mean for the labor market? So a few states or a few countries have adopted or refused to adopt them and banned them. The CBDC adoption is still in a very early stage. So let's take a look who did what. China. The People's Bank of China has been testing their digital yuan, or ECNY, how it's called, since 2020. Results still out. The Bahamas. The Central Bank of the Bahamas launched the sand dollar in 2020, which is the world's first fully operational CBDCs. Hooray, go Bahamas. Sweden is the third country. The Riksbank had been exploring an e-krona since 2017, so a very early stage, but again, it's currently in the testing phase. Uruguay is another country. They have now the e-Peso since 2021. Eastern Caribbeans created the Cash, which is, again, a pilot. For those countries who have banned, really outlawed it, there's not a state internationally recognized who has banned it. However, in the United States, certain jurisdictions, certain US states are banning it right now. The European Central Bank has expressed concerns about the impact on CBDCs on the stability of the financial system. The Bank of Japan had a cautious approach and warned for the risks. The United States Federal Reserve Bank has been studying the potential implication and wants to study it to identify if there is a need and an opportunity to launch an own digital currency in the United States. So aren't CBDCs just the same as Bitcoin or other blockchain payment systems? Well, on a first view, CBDCs and blockchain payment systems are very similar. There are two different types of digital currencies. However, they are different in features and purpose. CBDCs are issued by a central bank backed by the government, designed to operate as a legal tender as an alternative to physical cash. So centralized, controlled government is the topic of CBDCs. Bitcoin, Ethereum, and all the other virtual currencies are exactly the opposite. They are decentralized. It's a cryptocurrency operated on the blockchain, and it's not backed by any government, nor any regulatory body. It is independent. That's why it's attractive to some folks. So when the key difference between CBDC and Bitcoin and other currencies like that are the degree of decentralization, CBDCs are exactly the opposite. They are central. So in summary, CBDC and blockchain-based payment systems have similar characteristics, especially for users. That is just so attractive. Again, a few musings ago, I talked about how refugees from Ukraine could have secured their money if they would have transferred it in time into a Bitcoin-type currency, and then it could be used wherever they are. So there are benefits, especially if you bank with countries where the future of the currency is uncertain. In conclusion, CBDC is a complex issue which has both pros and cons. It has a potential to revolutionize the banking industry. It has also significant impact on the economic system. Government and central banks must evaluate carefully what to do. So let's talk about what would you like to do. Would you like to bank with CBDCs personally or with your company? Share your thoughts.
Thank you for joining us today. If you would like more information about Bridge House Law, please visit our website at bridgehouse.law. Before you go, make sure to like this video and subscribe to the channel for more up-to-date content. Bridge House Law, business-minded, client-focused.
Whether you're a private citizen, an international business leader, or simply someone eager to stay on top of the latest news, this book is a great way to get caught up on the most recent developments in the worlds of international business, tax, politics, and social affairs. Go to morningmusings.com and order your copy today.